Hi, everyone. It's Blair here at Time Trades. Thanks for joining me this weekend. It is Sunday, February 5th. This is your weekly video. I'm going to start this week with a little product update. I've been working away here to deliver some new innovations to improve and benefit your trading. So I wanted to review those. A number of them just got released over the last couple of days. So first up, we've created a new daily mass pressure index. So that's in addition to the weekly mass pressure index that is available on only two symbols, the SPX and DJI. So the difference is the daily mass pressure index is available on almost every symbol. Because it uses a shorter term cycle, it isn't limited to only stocks that have 60 years of price history or more. So the way we're rolling this out is we're tying the amount of history the amount of forecast that you can see to your subscription level. So what that means is that trial customers can see 3 weeks of future mass pressure index on the daily. Monthly paid subscribers can see 6 weeks, and yearly subscribers can see the maximum amount, and that's 52 weeks of weekly mass pressure and 160 days or so of daily mass pressure index. So that is the first change that we are rolling out here. And the mass pressure index I've found is very, very helpful in providing a potential future path of price. And it's nice to see when it aligns with the daily forecast probabilities that are on the chart. Now, of course, it's never going to be perfect, but that's not the point. It's to provide a degree of alignment and confidence with the daily probabilities that are generated by machine learning. So it's yet another tool to help you with your timing assessments. Okay, so that's the first product announcements. The second one is we just rolled out today a change in how the pivots are found and identified. So they're now using the zigzag algorithm, which is also available on TradingView. So if you want to replicate that on TradingView, you can use the zigzag and use a period of or a length of 116 days. Then you'll be able to get the same results in TradingView that we do on Time Trades. And that results in increased forecast accuracy for pivot highs and lows. I've gone through and tested a number of different lengths for the zigzag algorithm, and 116 seems to be optimal based on the testing that we've done so far. It also has another benefit because there's fewer Gann fan lines. The Gann fan lines are automatically anchored to the pivots that are discovered. So there's fewer of them, which makes the chart easier to read when the Gann fans are turned on. And they're also more intuitively located. Previously, some of the Gann fans were anchored in some strange spots, let's put it that way. So the anchor points for the Gann fans are now in more intuitive locations. Okay, so that's the second product update. And the third update is a pricing change that we're announcing with all the new value that we've been adding over the last few months with the Vedic intraday signals and the weekly mass pressure index and the daily mass pressure index. We definitely have provided a lot of additional value to subscribers, and I want to bring the pricing into alignment with that higher level of value. So we're going to be increasing prices for new customers starting on March 1st. All right, so what that means is that a new customer that joins after March 1st will be paying $39 up from $30. A yearly subscription will be $350 up from $270. And also, I'm going to be extending the trial from 7 days to 14 days so that you can really get a good opportunity to try out Time Trades. There's going to be no price changes for existing paid customers. So any customer that joins in the next month, in the month of February, will pay the current prices. And of course, as usual, all packages include access to the TradingView script. Okay, so that's it for the product and pricing update for this week. Let's go and take a look at the week in review here. And we're going to go over to TradingView, and we're going to take a look at the forecast that we built last week. That's the yellow line. This is a daily chart, so let's we can zoom in, maybe take a look at a 4-hour here, see how we did. So the yellow forecast line is what we drew last week, and you can see the actual path of price there. So we were pretty successful in forecasting price. I would give this an A- B+, because we caught the move down in the first part of the week. We caught the move up in the second part of the week. What we missed is kind of the magnitude of the move up. But still, that's I think overall another pretty good forecasting effort. A- B+ area. That's what I'd rate myself there. Okay, so let's zoom out and take a look at a few new structures that we're following here. You can see on this daily that I've got a couple of thick green lines drawn, and these reflect multi-year structures that I've identified in some of my research, and it gives us retail traders a chance for some very good risk-reward decisions here. In short, any price movement above this upper green line, very bullish, and indicates very strong prices later in the year, looking into October, November. Anything below the lower green line would indicate the reverse. There's a fair chance of a retest of the COVID low below the green line. So this push up into this structure here is very, very important. And also the pause up here at this upper green line is also very, very important. So we're going to be leaving these on our charts, and these are going to be guiding our forecast going forward and our trading decisions going forward. So that's a large structure that we're going to be tracking. I want to go back and review something I said on last week's video, which was that I was in an anticipatory short from Friday due to a break in structure late in Friday. And this is what we see here from that Friday, January 27th. And if we were to anchor Gann Fan near that high, then you can get a good idea of when this move down starts to run out of steam, right? As it starts to cross these Gann Fan lines going down, we can start to see that bearish structure that was initiated with this shift down on late Friday. That bearish structure starts to break, right? So I can't remember exactly where, but somewhere around here, I closed my shorts for a profit and switched into longs just as we saw the on the Fed day. This is the Fed day move here on Wednesday afternoon at about 2:30, right when the press conference started. So right when price broke through the 1-by-1 down, that's the blue line. So this is the blue line, the 1-by-1 down from the Friday high. Right when price broke through that, that was a bullish structure confirmation. And that's where I added more longs there on the QQQ. So what I'm finding is that this structure first trading is really helping, and it's helping me to stay in trades longer and also make better timing decisions about when to change sides. So this is an example of how we were able to trade both sides of the market using the structure, looking at how the Gann Fans identified structure breaks on the bearish side and also identified confirmations of new bullish structure as price crossed the 1-by-1 down. All right, so that is a micro level structure that we use. So we've covered a high level multi-year macro structure. That's these thick green lines and this micro structure here. So let's go and take a look at some individual stocks in time trades, and that will help us build a new forecast here. So we're starting as usual with the Qs, and we can see here we've got this pivot low back in October. So one of the things that we can do, let's turn on some of these new features that we've just added. We've got the daily mass pressure index, and we're showing 3 weeks of future here. And the Gann Fans is an existing feature, but it's more useful now that we've changed around how the pivots work and improved the pivot locations. So one of the things we're seeing here is that based on the Gann Fans, based on the mass pressure index, let me just turn off Gann Fans so it's easier to see. Based on the mass pressure index, we see a continuation up in the Qs, and that it also aligns with the probabilities of the move up here into Friday the 17th. So we're looking at maybe about a 1 week of consolidation and then 1 week up into Friday the 17th before we start to see a bit of a move down. Let's see if that's confirmed on some of the other stocks that we follow. Let's look at SPX. SPX also shows something a little similar. We've got some red probabilities of down days here. We've got a sideways look in the daily mass pressure index, and then the following week that ends Friday the 17th, we've got a push up into this little hollow here that's between these moves down. So we're starting to see a pattern form here on what the future path of price may be. Let's take a look at Apple. Apple also looks pretty bullish. We see lots of green up probabilities, not so much on the down red probabilities. We can turn on the new mass pressure index, and we can get a sense for what some of the potential may be. And again, we see kind of some sideways chop this week with a potential move up into Friday the 17th, and little to no probabilities of down days there. So again, this gives us some good timing confirmation on what may happen. But again, we need to also watch price very closely. We don't want to trade on timing alone. I do want to acknowledge something that we've been watching very closely here, and that is the cheat code. And that is also the short-term waves, right? And this is one of the reasons why we were looking for a potential top right in this time period here, is that we've got this short-term wave peaking here. We saw cheat code teal, which often indicates major pivots, happens about twice a year. And also on Friday morning, Thursday night, we had a Gann wave yellow. So those are all timing indications of a potential top, but we see no indication from price that it is topping after last week's very strong move up. We can take a look at some of the traditional indicators here over on TradingView to take a look at what's happening with price. Let's go and take a look at breadth. Breadth, as represented by the McClellan oscillator, it made a new high on Thursday with that big push up on, and then fell back a little bit on Friday. Now, it's still significantly down from the high on January 13th, but price is way above there. So this is indicating a bit of a divergence. We need to be aware of that. The other thing I like to track is Fed liquidity, represented by this complex formula. And we're also seeing a divergence here between price, the blue line is the SPX, and Fed liquidity is the yellow line. So we see SPX price up strongly, Fed liquidity down significantly. So it's not at a new low, but something that we need to be aware of is these divergences. We've got our guardrails in place. We know pretty confidently where we are going to be wrong. So I'm just going to go back here to the NQ chart, and we've got our major structure lines, which are these thick green lines, bullish above, bearish below. And let's go to the daily chart, and we'll draw our new forecast line here. So so far price is tracking straight up this 1x3 from the December 28th low. It's very light. It's a very light news week this week. We've just got the Powell speech really on Tuesday is the major event. And we've got our major structure there, and that's shaded with this green triangle. Okay, so let's, based on everything we've covered so far, let's show our new forecast. And based on everything we've covered, we're looking for some downwards consolidation that will likely find support at this downsloping blue Gann fan line, and also at this upsloping 1x3 Gann fan line. If it doesn't find support here, it likely will down at the lower thick green line, and then a push up into Friday the 17th, as we saw reflected in many of the time trades charts. So that's our new forecast for the coming week. So as always, look for structure confirmation before taking action on these. Make use of Gann fans. As even on short time frames, those give very good clues about impending structure changes. Okay, so let's move on and take a quick look at crypto, and then we can also take a look at Indian stocks and the Nifty. So let's take a look at Bitcoin. I'm just going to clean this up a little bit, turn off short-term waves. And let's just go with Gann fans here, and we'll put on the daily mass pressure index like that. There we go. Okay, so when we take a look at Bitcoin here, what we're seeing is this is the major Gann fan structure anchored down here at the November 21 low, and price tapped the bottom part of it, and it tapped the upper part of it, and now we're running into a little bit of resistance here from this 1x1 down from the all-time high of about 65K. All right, so this looks like significant resistance here. And also just above this level, we've got, let's take a look at magic levels. Just above this level, we've got a white magic level at 24,476. So there's a fair amount of overhead resistance here for Bitcoin. And we also have this 1x1 up from zero on January 24th. So that's another line here providing resistance. And we can see that is also reflected in the mass pressure index, as we see it chopping downward slightly and really kind of range bound for the next few weeks. Although we do see this big probability of a pivot high here over here in mid-March, that may act as a magnet as we get closer to that. Let's take a look at Ethereum. All right, so we're going to turn off the cheat code, and we're going to turn on daily mass pressure, and we're going to turn on Gann fans, and we can take a look at this. So what I like to do with the Gann fans, as I put them on brand news, I like to just sort of visually square the chart. So I'm just going to drag the chart so that this most recent fan encompasses the low part of the price range and the high part of the price range. And we can see it's a very similar forecast to Bitcoin, with some downward consolidation here. Somewhat range bound, though, likely staying within the orange magic levels, followed by a probability of a move up. It looks like it's likely going to find support on this 1x1 up from $0 on January 24th. Okay, now let's close the call with a quick look at the Nifty. Now, the Nifty has been having a real tough go of it lately with the Adani news, and you can see that was that turned into an extremely red week during a period that time trades did not expect a lot of down pressure. So what do we see happening next on the Nifty? Well, let's turn on Gann Fans here as well, and we can take a look at what's going on structure-wise. So let's just square this and see what's happening with respect to the pivots. And now we can see we've got a tap there, we've got a tap here. So this Gann fan here brackets price really nicely. We can use this as our guardrails. And what we're seeing is basically multiple waves of down pressure here heading into this pivot low. And we've got two potential areas for pivot low, March 3rd and March 10th. I kind of like the later one, March 10th, March 15th, because it aligns with a bigger, stronger cluster of down moves. So it looks like the Nifty is going to stay confined within this downward sloping Gann fan here until the mid-March timeframe. So this would be an opportunity to maybe short the upper part of that fan and take profits at the mid-range of the fan. Okay, so that's it for this week. Thanks again for using time trades. Good luck this week. Trade safe, and we'll see you again next week. Bye now.